Well, it's July 2015. It's been quite a couple interesting weeks in the first part of July. We've talked for years and written about it for years of what happens when there's too much debt in the world and banks are trying to solve it through simple levers of printing or rates. China, Greece, the United States, a lot of things are happening in all three of those regions simultaneously. Let's start first with China, Bob. I want to ask you some questions about that. It doesn't feel like a very normal or efficient market when $3.5 trillion of stocks are being traded in 80 trading days and massive volatility. We've seen the market go up 140% year to year and then down 30% in a matter of weeks. 27% of the names are taken off the market. The Chinese government is actually, in a kind of statist way, literally arresting people for making sales, putting caps on short sales. In short, it doesn't feel like a very rational or safe market these days. What does this say not only about the Chinese market, but about the policies in general in Asia and China in particular, about central planning to try and interfere with normal price discovery and rational markets?
Well, this has been an issue with China for a while now, is their government has been heavily involved in their economy. Now, let's take that in a longer-term context. What's really made China so great and productive over the last couple decades is that the government was getting out of the economy. It was becoming more free market. But we're reminded by just what you said that it's not all the way there yet. I mean, the reality is state-owned enterprises, big government companies are what still drive a lot of that economy. And absolutely on the financial side, the government is still heavily involved in manipulating the economy and the market. They run a lot of the big banks. They basically print money, give it to the banks to lend out to boost the market. Right. Now in the stock market, they're trying to boost that in an incredible bull market. Which has fallen. And as you said, what's amazing is the number of tactics they've used to boost it back up. I also should mention they banned IPOs, which has its downside too, because part of the reason people invest in that Chinese market was to get in the hot IPOs, right? So that's off. You mentioned that 27% of the companies are off the list. Well, it's true. 27% of the companies have voluntarily pulled themselves off the exchanges because they're afraid their price will go down. I mean, is this a real market? No. And they're all hoping it all works out, just kind of like we are. We're all hoping that the Fed somehow is a lot smarter than we think, that government intervention works great. And for a little while in China, it seemed to be going fine. Even on the market, stock market, it seemed to be going well. But we're seeing real problems and real trouble. I can't say that the government won't be able to pull this out, but they've certainly got a big, bad, bloody nose with all this market intervention so far. And fundamentally, again, this tells you that ultimately all this intervention in the economy, the broader intervention that they've been doing, and the more smaller stock market intervention, is bound to fail. Already is right now. But it's a fascinating experiment to watch.
And it really is now at this point hard to even ignore. There was clearly a real estate bubble in China, replaced now by, let's go to something else. Let's quickly replace the real estate bubble with an equity bubble. We've seen that movie before, by the way, in this country. So it's no longer even lack of transparency. It's an obvious attempt by the central banks or the government to create a market. Let's go from someplace a little less robust but equally hurting. Greece has certainly made the headlines now. We saw a referendum. The Greek people wanted out of austerity, but in the euro. The kind of rich uncle up north in the ICB, or excuse me, the IMF and the ECB said no to that. You're going to take our deal or leave it. And basically, with a gun to their head, they agreed to more austerity than they were going to get in the referendum anyway. So a lot of Greeks are saying they're a colony now and no longer a part of a union. It doesn't feel like a union. It feels kind of like a forced partnership, or as they say, a colonial kind of takeover of Greece. The bottom line with me, and we can talk about this about Greece, is they're in debt. They couldn't print their way out of the problem. They don't have a printing press in Athens. They have that in Brussels. But the problem is still debt. Is it too unfair to blame Greece for being unable to control their debts when really that's the same problem in Europe and the U.S.?
No, I don't think it's unfair. I mean, the reality is that Greece brought a lot of all this debt on themselves. Being forced to pay it back really shouldn't be considered a hardship on them. I mean, they just borrowed the money. Even if they printed their money, which was the option here. And notice even the Greek people were very concerned about that, because if they print drachmas, what's the problem? Well, what are the drachmas worth? Yeah, couldn't the government print too much of them? Exactly. Irresponsibility in debt can lead to irresponsibility in money printing, and often the two are related. So what's happening with Greece is really of their own making. Yes, it's too bad from their standpoint that Germany and France aren't willing to put in more of a bailout than they are without some restrictions and just give them a blank check, but they're not. And the idea that if we just act tough and our prime minister gets this resounding support to just be tough with the Europeans, that they'll write checks. Come on, anybody who's been in sales or tried to raise money or whatever knows that That isn't the way it works. They don't have to give them money, whereas the Greeks have to have this money, not so much just for the government, but really for the banks. The banks are literally sort of out of cash.
Yeah.
Of course, again, they could print drachmas, as you said, but that wouldn't work very well, would it? Because people aren't going to give that a lot of value.
Right.
And so what's happening is when you're going to the Europeans and saying, I want more euros to keep turn my banks back on to open them up again, but we're not going to do anything for you, we're going to be tough. Well, how would you react? Oh, really? You want me to give you all this money and you're not going to do anything? You're not going to change anything at all?
Yeah.
You just want to be saved. So, yeah, I think that the Greeks and the Greek people kind of recognize that. And obviously, Prime Minister recognizes that they had to change. They did. But remember, this still hasn't been approved. It has to be approved by Greek Parliament, completely, the new austerity, and also has to be approved by Germany as well.
Well, approved or not approved, I think the point is still the same that you made earlier, Bob. When you have irresponsibility and debt, you come up with drastic measures to try and save the problem, often when it's too late. And again, coming from Europe, I know it's kind of the national joke that in Greece, tax evasion's a sport and avoiding a work ethic is equally fair. But in all fairness to the Greeks, and you do feel sorry for them to some extent they brought it on themselves, but they're broke. They don't have a printing press. This is what happens with too much debt. We get desperate policies that work for a while and give you a nice vacation, ultimately end badly in lines at the ATM machine. In some ways, without being dramatic, that's the same problem we have right here in the U.S. I want to segue into the U.S. and we've talked about China and Greece as obvious examples of things not working from the top down to micromanage the markets. But the U.S. is no less guilty of that. It's just been a lot more fun since '08 to watch the Fed print, borrow, and keep rates at zero. But we're already starting to see this month, as things are going wrong in China and things are going wrong in Greece, the reports on revenues of the S&P companies are horrible. Wholesale numbers are down 7%, exports are down 7%. In the energy sector, earnings are down 60%. We're starting to see defaults now on the bonds and commodities, in the commodity sector and the energy sector. And there's nervousness now. Even some of the cheerleaders are backing off. Not saying this is the end yet. We know the printing press will come back in. What Athens didn't have, we do have. We can print our way for more time. Are you starting to see kinks in the armor being more obvious even now? And are we kind of this concatenation of events? Greece, China, now U.S. earnings, U.S. numbers are looking pretty bad. Energy is looking bad. Where are we kind of headed in the next 6 to 12 months, you think? Well,
let me go from a bit of an overview to the specific areas you talked about. In the overview, in fact, Robert Samuelson, the syndicated economics writer with Newsweek and very widely read, wrote a while back, he said, we're all Greeks. And it's true, we're actually all doing a lot of what Greece is doing. It's just they're getting hit a little harder earlier. It's like subprime mortgages. It was really a housing market problem, not a subprime mortgage market. In a sense, we were all part of the subprime mortgage crisis because what it really was a housing crisis. Price of houses were going down, and that's going to hurt subprime first, but ultimately it's going to hit all your homes. Same thing with Greece. They're just getting first what's coming to us later. So in terms of what's specifically happening in the U.S. right now, you're looking at a revenue recession perhaps for the S&P 500. What that means is revenues for our big corporations are going to be down 2 quarters in a row. That's not a good sign. We've got an economy that's still slow. As you said, consumer spending is not that strong compared to what people had hoped. It did decline this last month. So you've got some real issues coming up with the U.S. It's not quite as rosy as people say. In fact, people are even talking about more. I think both candidates Jeb Bush and Hillary Clinton are talking about the fact that so many people left the workforce. One reason our unemployment rate is low, and one of the biggest reasons, is that huge numbers of people left the workforce. There's a lot of problems out there that don't show up because we tend to want to look at, Billionaires Row that's being built in Manhattan, or the next social media billionaire. There's now over 100 companies worth over $1 billion, I think they're private, that are social media, other young companies. So I think people are getting distracted by these headlines of all the great wealth we have, and not seeing what's really going on underneath that. Again, S&P 500, this is a pretty important part of your economy. Revenue recession now, 2 quarters in a row. That's got to be looked at as a real issue.
Is there a concern, really quickly, about Europe as well? We've seen Europe kind of with Greece showing its vulnerability. Let's not forget a lot of the companies on the S&P get their revenues overseas or based overseas. We're very, very kind of incestuous and correlated, these global markets. Certainly the U.S. is the ultimate canary in the coal mine. If we blow, everybody blows. But we're starting to see cracks obviously in Europe now and in Asia. Are you concerned that that Germany or Europe in general could lead the charge, or are you more looking at the U.S. or Asian markets first? 'Cause China can export a recession just like it can export toys and other things.
It can. I would say China's the obvious one that could cause problems. Again, we have a big Fed, we have a big printing press. You're right, Greece doesn't have a printing press, but that wouldn't solve their problems, just printing a lot of drachmas. It would just put it off.
Yeah.
And that's all it's going to do here is the same thing as a Greek printing press. It will just put it off. And so, yeah, if we have an outside problem in China or in Europe, I think our Fed will react and print and offset it to some degree. But you're right, we're one big global economy, and certainly some of the problems we're having with our revenues, with our corporations, is due to what's going on in Europe. And don't think that's over. Even if they do come out with a bailout, as I said, a resolution to the bailout crisis does not mean a solution to the debt crisis. Right. They've got big problems fundamentally. Greece is not improving their productivity. This is a broad issue a lot of countries have, including the U.S. We're not improving our productivity as fast as we used to. Right. And Greece also done something pretty big, shutting down those banks. It's going to be hard to recover from. If you were Greek, would you immediately run down and put your money in the bank?
Sure. Right.
Just after they open, having been shut down for 2 or 3 weeks, knowing that the ECB could shut them down again anytime in the next year?
Yeah.
I don't know. I think we've got some issues coming up. I think we'll certainly keep our listeners and our readers informed.
Yeah, Greece is a small example of what could come in other countries very soon.
Very much so.
Yeah.
Thanks, Matt.
Thanks.